Back in February, the Acasti Pharma Inc. NASDAQ ACST stock had hit its peak, but since then it has been a rough ride for the stock. Folks who choose to take a position on ACST stock should understand that it could decline sharply before staging a turnaround. That's the nature of biotech penny stocks. They're known for making outsized moves in both directions, and that's why it's advisable to only maintain small position sizes in these stocks. In this video, we'll check out why Acasti Pharma stock is a buy now. Number 8, a closer look at ACST stock. I'm not even sure if roller coaster ride is a sufficient phrase to describe how ACST stock has behaved over the past year. Back in mid-March of 2020, the stock was trading at around 31 cents. The next thing you know, a buying frenzy ensued and the share price rocketed up to 90 cents in June. Then in late June, the bulls absolutely capitulated as ACST stock plunged suddenly to 24 cents. As it turned out, however, it would have been a good strategy to hold on to one's shares. That's because there was a massive bull run in late 2020 and early 2021. On February 20th, 2021, the share price reached an astonishing 52-week high of $1.22. This was evidently a case of too high too fast, as the ACST stock price promptly declined after that amazing run-up. The share price is at 60 cents now, and as we've seen, the sellers are capable of pushing the share price much lower than that. Therefore, it's recommended to allow the stock price to move lower and bottom out before taking a long position. Number 7, negative sentiment priced in. While I'm advising caution, I'll still acknowledge that any good news could easily send the stock price soaring. Indeed, I would assert that bad news and negative sentiment surrounding Acasti Pharma have already been priced into the stock. In order to explain this further, let's rewind a little bit. Acasti Pharma's main product candidate is a prescription drug called Capri. One of the most important applications of Capri is to treat severe hypertriglyceridemia, i.e., really high triglyceride blood levels. The drug uses krill oil to hopefully achieve this. Unfortunately, August 2020 wasn't such a great time for Acasti Pharma. Reportedly, the company revealed that a clinical study on Capri had not met its primary endpoint. On top of that, Acasti Pharma disclosed that it wouldn't file a new drug application with the U.S. Food and Drug Administration for Capri, and that it didn't intend to conduct additional clinical trials for this product. Number 6, major capital infusion. These disappointing events have been known and priced into ACST stock shares for a long time now. And when the general investor sentiment is at its lowest point, this could be a setup for a positive news surprise. And in fact, there was a recent update that could be viewed as positive, depending on how you look at it. This development isn't about Capri, it's about a capital injection for Acasti Pharma in the form of an at-the-market equity offering program. As the company reported, since the last distributions reported on January 27, 2021, Acasti issued an aggregate of 20,159,229 common shares over the NASDAQ stock market for aggregate gross proceeds to the company of $21.7 million US. This is a two-sided coin, of course. On one hand, it means that Acasti Pharma has generated nearly $22 million, which can be used for a number of purposes. On the other hand, the current shareholders might not appreciate the assurance of more than 20 million stock shares. Perhaps you may feel that Acasti Pharma could really use that capital injection and will put it to good use. If so, then overall the event can be seen as net positive, as they say. And yes, there's been disappointing news regarding Capri. Still, this is a known factor. And for all we know, a positive surprise could be just around the corner. Number 5, ACST stock slumps 65% quickly. A good buy now? The ACST stock has tanked by as much as 65%, and it might be worthwhile for investors to figure out if it might be worth entering the stock at this point. Hence, it might be important to take a closer look at the company and its business. In September last year, the company hired the service of Oppenheimer & Company as its financial advisor. At the time, it was believed that the collaboration was going to unlock considerable value for investors. Although it is true that success is not guaranteed, the company boasts of a seasoned management team that is believed to be one of the reasons behind a degree of optimism about its future. At this point, investors could keep their eyes peeled about any fresh news about the company. Number 4, signals and forecast. The Acasti Pharma stock holds buy signals from both short and long-term moving averages, giving a positive forecast for the stock. Also, there is a general buy signal from the relation between the two signals, where the short-term average is above the long-term average. On corrections down, there will be some support from the lines at 48 cents and 47 cents. A breakdown below any of these levels will issue sell signals. A buy signal was issued from a pivot bottom point on Thursday, May 6, 2021, and so far it has risen 23.78%. Further rise is indicated until a new top pivot has been found. Furthermore, there is a buy signal from the 3 months moving average convergence divergence, MACD. Some negative signals were issued as well, and these may have some influence on the near short-term development. Volume fell together with the price during the last trading day, and this reduces the overall risk as volume should follow the price movements. Number 3, support, risk, and stop loss. Acasti Pharma finds support from accumulated volume of 50 cents. And this level may hold a buying opportunity, as an upwards reaction can be expected when the support is being tested. This stock may move much during the day, volatility, and with a large prediction interval from the Bollinger Band, this stock is considered to be high risk. During the last day, the stock moved 0.0420 between high and low, or 8.57%. For the last week, the stock has had a daily average volatility of 14.89%. Our recommended stop loss, 48 cents, negative 3.82%. This stock has high daily movements, and this gives high risk. There is a buy signal from a pivot bottom found 12 days ago. Number 2, ACST stock earnings and revenue forecast. NASDAQ ACST Acasti Pharma's forecast annual earnings growth rate of not available is not forecast to beat the U.S. biotechnology industry's average forecast earnings growth rate of 25.74%. And while it is not forecast to beat the U.S. market's average forecast earnings growth rate of 20.28%. Acasti Pharma's earnings in 2021 is $3,078,332. On average, one Wall Street analyst forecast ACST's earnings for 2022 to be negative $17,440,657, with the lowest ACST earnings forecast at negative $17,440,657, and the highest ACST earnings forecast at negative $17,440,657. On average, one Wall Street analyst forecast ACST's earnings for 2023 to be negative $12,596,030, with the lowest ACST earnings forecast at negative $12,596,030, and the highest ACST earnings forecast at negative $12,596,030. In 2024, ACST is forecast to generate negative $6,782,478 in earnings, with the lowest earnings forecast at negative $6,782,478, and the highest earnings forecast at negative $6,782,478. Acasti Pharma's forecast annual revenue growth rate of 617.57% is forecast to beat the U.S. biotechnology industry's average forecast revenue growth rate of 50.15%, and it is also forecast to beat the U.S. market's average forecast revenue growth rate of 14.14%. Acasti Pharma's revenue in 2021 is $81,000. On average, one Wall Street analyst forecasts ACST's revenue for 2022 to be $1,344,868,414, with the lowest ACST revenue forecast at $1,344,886,414, and the highest ACST revenue forecast at $1,344,868,414. Number 1. Is Acasti Pharma stock a buy? Several short-term signals are positive despite the stock being in a falling trend. We conclude that the current level may hold a buying opportunity, as there is a fair chance for stock to perform well in the short term. Even though its cash runway makes us a little nervous, we are compelled to mention that we thought Acasti Pharma's cash burn reduction was relatively promising. After looking at the range of measures, we think shareholders should be extremely attentive to how the company is using its cash, as the cash burn makes us uncomfortable. Just because a business does not make any money does not mean that the stock will go down. The consensus among 4 Wall Street analysts covering NASDAQ ACST stock is to buy ACST stock. Out of 4 analysts, 25% are recommending ACST as a strong buy. No one is recommending ACST as a buy. 75% are recommending ACST as a hold. No one's recommending ACST as a sell, and no one's recommending ACST as a strong sell. According to 3 Wall Street analysts that have issued a 1-year ACST price target, the average ACST price target is 92 cents, with the highest ACST stock price forecast at $2 and the lowest ACST stock price forecast at 25 cents. On average, Wall Street analysts predict that Acasti Pharma's share price could stay at 92 cents by September 2, 2021. The average Acasti Pharma stock price prediction forecasts a potential downside of not available from the current ACST share price of 50 cents. Do let us know in the comment what are your thoughts about this stock. Please subscribe to the Stock Advisor. Thanks for watching.